Thursday, December 14th, 2023, Maneco 64, home of alternative economics and contrarian views. So some days are harder than others to find a topic to talk about, but today it isn't. I would say today is a really important day in terms of what I've been trying to warn people about for the last, well, almost 8 years now. This is my 8th full year doing this almost every day, trying to warn people about the evils of fiat currency, or fiat money, if you want to call it, of inflation. And when I started out, of course, it wasn't a topic that was as popular, I would say, as now. It felt very lonely, but it's great to see that a lot of people are waking up to it. So what's the topic for today? Well, the topic for today, of course, is the Fed and the fact that Jay Powell and his cohorts at the FOMC, to quote Lawrence Lepard, folded like a cheap suit. Yeah, and what does that mean? Well, we're going to look at that today, what the Fed has done and the implications of it. And we're going to look, of course, back at history and what history tells us, because as you know, those of you who have been listening to me for a while, I like looking at history because it gives you an idea of what can happen in the future or even now. Before I do, though, I like to let you know I have a very interesting and a guest that I've always wanted to have on the channel, and it's Doug Casey. I'm going to be interviewing him next week. Many of you know about Doug Casey. Many of you might know that right now he is in Buenos Aires in Argentina. So I thought that I'd take some of your questions for him to ask him. So if you have a question for Doug Casey, go to the comment section and write #question for Doug, so we can see that it's a question for Doug, and then ask a question. It can be about anything, really, within reason. And if you want to know, of course, what's going on in Argentina politically, yes, there's a lot of speculation and assumptions about Milei. And maybe Doug will help us understand a little better what's going on in Argentina. But not just that, Doug is a really interesting guy, in my opinion. So yeah, #question for Doug. Keep it to one question. We can't, you can only do one question per person, and we'll try to get all of them in. So back to the Federal Reserve. So what's happened to the Federal Reserve? They had, of course, a 2-day meeting. It started on Tuesday and ended yesterday. They came out and announced that they've kept rates unchanged. But the big announcement yesterday was they've got a dot plot chart where each member of the Federal Open Market Committee gives his or her opinion on where rates are going to be at certain times in the next 12 months or 18 months. I'm not sure how long. And yesterday it came out that they expect at least 3 rate cuts in 2024. And that really surprised the markets, because there's been talk that the Fed, especially Powell, that he was going to be tough, that he was going to leave rates higher for longer. And here they are. It's not even 2024, and they're saying they plan to probably cut at least 3 times, and this is just for starters. And a few years ago, I used to wait for his press conference, wait for the announcement, and listen to the press conference. The Fed has a YouTube channel. I don't watch TV, but I mean, I've gone past the point of waiting for them to see the light because, and by that I mean for them to realize that they are the problem. So I stopped watching these things, and actually last night, because it came out at 7 p.m. London time, and the press conference starts at 7:30. Last night, Rudy and I went for a walk. So when I came back, just looking at where the markets were, I could tell something significant happened. And thankfully, there's people like Lawrence Lepard who keep abreast of these things on Twitter. And this is what he said. The mistakes that the Fed, in his opinion, is making. First one was saying that inflation is transitory. The other one is we are not even thinking about cutting rates. That's what Powell said, I think, earlier this year. We will stay higher for longer. There you go. We will loosen before 2% CPI. And he says the man is a professional liar. Fiscal dominance changes everything. He folds like a cheap suit, just as we all knew he would. One of the comments there that is interesting is we will loosen before 2% CPI. So he's basically saying he doesn't want the general public to benefit from prices that are actually going down. What's the problem with groceries or other prices going down? There's nothing wrong with that. Or house prices going down or rents going down. Well, Jay Powell and the people at the Fed, they don't want that. They want the currency to debase as per the CPI at least 2%. And I'm just going to show you a chart here of the CPI, and not the percentage numbers, but the index itself. So this is from 1940 something, 47, and you can see that there's it's been a one-way street up. There is just like a few blips down on that CPI index. The last one was in 2008, and before that, and after that, it was in February 2020. But as you can see, the CPI, the index itself, is not going down, and they don't want it to go down. And that's because, as I've said many times before, in a fiat currency system, the other side of the currency is the debt. And if you pay off the debt, if you stop inflating, and by inflating I mean keeping rates really low so that people can keep borrowing and increasing the debt load. And the other thing as well, when you issue the debt, there's never enough currency to pay the interest, so you have to keep doing it over and over again. So yeah, no deflation there. It's still inflating. And if you look at M1 as well, you know, that went through the roof in 2020 from below 4 trillion. And we're still around 18 trillion. So we're nowhere near going back to where we were or back to the trend. And now he's, you know, the Fed has come out and said, well, we're going to start inflating again. And the other comment that Lawrence made that is interesting is about fiscal dominance. What does that mean? Well, it means that the government, the federal government, the public, and corporations are so indebted that, yeah, that becomes a problem, and you can't let rates remain too high or else everything implodes. And they've given into that. And it's not surprising that yields drop massively. So we'll go quickly through the yields here. Prior to yesterday, the 10-year was at 420. We're now at 395. It's down another 8 basis points. Even the short end is dropped massively, of course, because they're looking for rate cuts. The 2 years now at 433, down another 14 overnight. So, and this is the chart, of course, that says it all about the fiscal dominance, the U.S. debt clock. And now, though, let's go back in history and back to Ludwig von Mises and human action. And I've spoken about this many times. Of course, long-time viewers will know about this already. But for those of you who are new, this is where I think we are. And I've spoken about this before. And I predicted that this would happen. And we will look at another book on why I predicted it. So the crack up boom, are we there? Are we there yet? Right? This is from this book. So let's go through it. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. Well, that's what they said there. They won't let CPI go negative. They don't even want it to go below 2%. And as you saw, the index always goes up. So people are going to wake up. A breakdown occurs. The crack up boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, or it could be months, I would say, the things which were used as money are no longer used as a media of exchange. And I'm not saying this is going to happen within weeks and days or months. I'm saying this will happen once people wake up. And what I'm trying to say here, we're very close to that moment. It's something will trigger it, and this could be the trigger, what the Fed has done here. They become scrap paper or scrap digital entries. I put that one there. Nobody wants to give anything away against them. It was this that happened with the continental currency in America in 1781, with the French mandats territoriaux in 1796, and with the German mark in 1923. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. What does he mean, von Mises, by a policy that cannot last? Well, eventually it will just collapse because people will run away from the currency. They will realize that they're not going to stop inflating. And as you saw from that M1 chart, and you can look at M2 as well, it's not as severe. It's not stopping. So this was from page 428 in this book, Human Action. Some people consider this the Bible of the Austrian school, or specifically Ludwig von Mises' work. Yes, it's very thick. You might be able to find a free PDF, I think, in the Mises.org website if you want to look at it, or you could buy it. So the other book that has guided me in the last, 20 plus years as to what was going to happen. Yes, it's been a long journey, but I don't think the laws of nature and economics will ever change unless something really radical happens. Aliens come to Earth, or some people think they are. But anyway, it's this book here, Fiat Money, Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dixon White. Andrew Dixon White, he was an ambassador, I think, in the 19th century, maybe in France. He was the founder of Cornell University as well. He was a skull and bones from Yale, but I won't hold that against him because he wrote a pretty interesting little book here. And this is what he says towards the end here when he's summarizing what happened in revolutionary France in the 1790s. It progressed according to a law in social physics, which we may call law of accelerating issue and depreciation. Well, that's the issue of paper money and the depreciation thereof. It was comparatively easy to refrain from the first issue. What he's saying here was easy to not do QE at first, right? And then he says, it was exceedingly difficult to refrain from the second, to refrain from the third, and those following was practically impossible. It brought, as we have seen, commerce and manufactures, the mercantile interests, the agricultural interests to ruin. It brought on these the same destruction which would come to a Hollander opening the dikes of the sea to irrigate his garden in a dry summer. It ended in the complete financial, moral, political prostration of France, a prostration from which only a Napoleon could raise it. So even the, not just the monetary and economic situation seems very similar in the US, in the UK, and throughout the Western world, but also the political and moral situation looks very divided. So it's strange, you know, how history doesn't repeat exactly, but it sure rhymes, you know. And I think it's a French saying that the more things change, the more they become the same, or le plus ça change, le plus c'est la même chose. And I think that's where we are. Of course, I can't tell you exactly when the crack-up boom, it's also called a melt-up, will kick off. But I think we're very close to it. Maybe a new high on the NASDAQ, maybe gold at 2,200. That could be the trigger. So with that, let's quickly look at where the markets are this morning. It's 8:19 a.m. London time. And is it too late to exchange rapidly depreciating fiat for gold and silver? It's never too late, especially under the conditions under which we are, in my opinion. And if you are able to do that, or exchange paper for real money in the past, I think you're going to be in a much better position than those that haven't. So right now, spot gold is at 2,036. It's up $8. The high's been 2,039.50. And I'm not surprised. And I tweeted yesterday, as you can see here, that I think at the time we were just below 2020, and I said 2040 will be a key resistance because that was the monthly closing last, well, this November is the all-time monthly high. So I expect a little bit of resistance there for now. The low has been 2022, so we're up about 0.5%. Spot silver is just broken through 24, which is encouraging. Yeah, it's nowhere near being too late to acquire silver. I think it's a steal. Anyway, we're at 24.08, up 28 cents or 1.1%. Well, the melt up seems to have kicked off, not just for gold and silver, but for equities and for the bond market. But what I think is going to happen is that gold and silver and hard assets, they're going to outperform the paper assets a lot more. That's the way I see it. Anyway, the Dow futures is up 100 points, above 37,000. The NASDAQ is up 75 at 16,600. Let's quickly have a look how far away we are from the all-time high here in the NASDAQ. Well, the all-time high is 16,769. So we're about 150 points away from the all-time high. So think about the melt up, right? So S&P, not surprising, is up 14 points, 47.21. How close are we to the all-time high in the S&P? Let's have a quick look here. It's not something that I follow too closely, the stock markets, but the all-time high is 48.17. So about 100 points. I would expect these to be tested before the end of the year, actually. So to the currencies as well, the dollar dropped quite a bit on the back of the FOMC announcement. Right now, things are pretty steady with the exception of the dollar versus the yen. Dollar is down about 7/8% at 141.66. And versus the yuan, the dollar is at 7.14. But remember, we were around 7.20 recently. Check out the other currencies. Aussie dollar is up 0.75%, 67.10. The dollar is down 0.5% versus the loonie or Canadian dollar, 134.61. And the Kiwi dollar is up 0.2% at 62.12. Let's have a look at commodities. Yeah, they've risen as well. The general commodities. Crude is back above 70. WTI up 0.75% at 70.20. Brent is up just over 0.75, trading around 75. And platinum is up $8, trading around 945. And high-grade copper has gotten a boost. It's up 2.3% overnight at 388. As I said, treasury yields have dropped massively. Yes, bond prices are rising again. Now, I think the next step for the Fed would be to announce when they're going to stop quantitative tightening, because it doesn't make sense for them to start cutting rates and doing QT at the same time. It's like accelerating and braking a car. It doesn't make sense. So with that, I'm going to wish you all a very good day. Take care. Bye.